Um, I apologize. I should have probably just showed you here. This is the agenda today. Getting to CMU, some observations, my career path, how we launched Affirma Capital, some best practices, leadership approach, and some observations from the boardroom and observations on COVID. This should have been up before. This as I said, I think this shows my journey a little bit in terms of the different places that before I got to Carnegie Mellon. Some observations on Carnegie Mellon. It was a really hard school, and I really thought everyone was much smarter than me. And I'm not being humble, I'm not being anything. It just the brain power of some of those students was really impressive. My days were very intense. I had a full course load. I had 2 hours of soccer training every day. And I was also working a lot of part-time jobs as well. But CMU taught me to fight and persevere and work on my time management. I was always pretty good at time management, but I think graduating from Carnegie Mellon made me even better. And as I said, I love Carnegie Mellon. I still support Carnegie Mellon formally and informally. In terms of my career path, I was able to get to Bear Stearns in New York to do investment banking. I did healthcare investment banking on the M&A team. Bear Stearns at the time was a top 10 global investment bank. Today, you may know it as one of the casualties of the 2008 crisis. It was a scrappy place. It was not as good as Goldman Sachs and Morgan Stanley and those type of firms. And they would always call it scrappy. And I don't know if they were trying to put it down. I liked it. I think I was a scrappy guy. This was a scrappy institution, and I very much enjoyed my time there. Bear was also known as a place that was a bit of a sweatshop for the junior people. But for me, coming from CMU, it was easy to do all-nighters. So though I didn't know much financial modeling before, I figured out financial modeling is not that different than computer modeling or some of the business classes I took, and I was able to pick it up relatively quickly. I noticed some of the other kids who went to softer schools or more liberal arts schools, they dropped out. But the kids who went to sort of hardcore institutions were able to hang in there and finish the 2-year program. Bear also was very big on hiring people who played varsity sports or who were in the military while in college. And I think that's because they were good with teams and good with managing their time and dealing with stress. But it was intense. There was my worst time ever. One time I got there on a Sunday. I didn't leave till a Wednesday. So I was literally up for 4 days trying to get some work done. And since I came in on Sunday, I was in casual clothes. So people knew that I had been there for 4 days, but no one seemed to care, but it was okay. I also wrote a book while I was there, but I was never able to, I didn't have time to get it published. But I really learned a lot. And I think anyone who is thinking about getting into investment banking, I highly recommend these 2-3-year analyst programs. After Bear, I debated getting an MBA or trying to break into private equity. And I was fortunate to get a job with Carlyle Group in Washington, D.C. So in 2000, I moved to Washington, D.C. to start that journey. And now, I had already gone full circle with Pittsburgh, given I had grown up in Pittsburgh and gone back to college. And now I'm going back full circle with Washington, D.C., and that I grew up there as a teenager and now going back for work. My sisters were and still were also there. They went to school in the D.C. area, and they also continue to live in Washington. Carlyle was a wonderful experience. I learned a lot. And at the time, the group was $20 billion asset management AUMs. Today it's 250 billion AUMs, which just shows you how much the asset class has blown up. We also had access to senior people, which was fantastic. I think today I probably wouldn't have half the access to senior people, but we were able to talk to the founders and learn a lot. It was a step change from the robotic modeling that I was doing at Bear. And now they wanted you to think. And it took some time to get used to because no one had asked for my opinion for 2 years. So that took some time. I'm happy to discuss investment banking or private equity during the Q&A. And as Sajeev just said, please, if you want to start asking questions, please feel free. And then we can see them as they come. Fast forward to 2005, I am back in New York with another firm, and my dad was running a successful consulting business in Egypt. And he told me private equity was starting to take off. And I was also getting calls from headhunters to move back home. The region is booming. I told them, I don't know where home is, but at the time I was 30, and so far I had a very good career between New York and DC. But I was beginning to question my edge and how I can differentiate myself from others. I'll go to this concept of edge later, but a few groups put together interesting offers in the Middle East. I told my boss in New York I'll be back in 6 months, and I've now since been overseas for the last 15 years, for the last 11 or so in Dubai. And my hunch was right. I had much more of an edge coming to a new emerging market than staying in a very place that was very, very sophisticated. So I then had now gone full circle to the Middle East, given I was there for a couple of years for high school, and now I've been here for the last 10, 11 years. To wrap up my background, I spent 9 years with Standard Chartered Private Equity before myself and a few partners bought the business from the bank. We formed Affirma Capital, $3.5 billion AUM, independently owned private equity businesses with offices in Dubai, Johannesburg, Mumbai, Shanghai, and Singapore, and Seoul. We launched that in August 2019. In addition, I've sat on 10 boards or so for various companies in the Middle East and Africa. I've been on the board of businesses, of poultry businesses, tissue business, oil services, online retail. We sold that company, Souk.com. We sold that company to Amazon. The telecoms tower business, we sold to American Towers Corporation. I'm on the board of a bank in Nigeria, aluminum can business also in Nigeria. We've also exited many of these investments when people have said, you can't exit emerging market PE. So we've done pretty well. And currently living in Dubai, happily married with 3 crazy sons. And thankfully, they're other room keeping quiet. So they're so far doing a great job. But as I look back at my life, it's very interesting that I've gone full circle with Pittsburgh, with DC, and with the Middle East. So in terms of launching Affirma Capital and how does it relate to your entrepreneurial goals? I'll give you a little background of the transaction, and then we can see how it relates to perhaps what some of you want to do. This was a highly complex transaction with many different agendas. You had ourselves as the GP, the general partner, who wanted to buy the business. We had existing LPs, limited partners. We had a new LP we had to come in. We had the bank who owned the business for 20 years. And then we had the team, the non-partner team, who are getting very antsy because they're asking themselves, what should I do? Should I stay or should I go? Given this took about 1.5 years to close. So highly complex, many different agendas. One thing here, we had asymmetrical information. By that, I mean, we were sitting on 60 assets. We were sitting on $3 billion of assets. We knew those better than anyone. We knew how to price them. We knew the risks. We knew the rewards of those assets. That was really the positive, and that's what really kept me and my partners going with this transaction, because we said, we know these assets better than anyone. And I think as you think about doing something on your own, you need to ask yourself, what would I be doing if I don't do this? Would I be working for a traditional job? Would I be doing something else? What is my BATNA? What is my best alternative versus this? And once again, back to edge. We see a lot of companies out there that frankly don't have edge. And especially now in this COVID environment, if you don't have an edge, your company will not last. So what makes your company so unique, and why is it now the time to start it? So having concluded my background, I just wanted to spend a little bit of time on some tips and learnings from my career, and if it can help you. I think the mental health aspect of your job is critical. And how are you going to stay mentally healthy and mentally happy? For me, I probably read 3 to 4 books a year. I wish it was more, but I always make sure I read a book or 2 around Christmas time and a book or 2 during the summer holidays. I listen to podcasts daily. I listen to a lot of American news. I listen to health, and I listen to a lot of sports. And then I work out probably 4 to 6 times a week. And for me, these things are really important. The days I get a workout in, I feel much better. So I know working out is not for everyone, but you need to figure out what is it that's going to make you feel good. And if you can, do it in the morning. I've found whatever you can do in the morning will have a very good, it will help you a lot in terms of your mood and your ambitions. I come up with my best ideas when I'm working out. Next one is passion. What drives you? If it's just money, you're not going to last long in your career. That can be a short-term goal, but if you're constantly looking for the next paycheck, it'll be very hard to build a long-term career. This concept of your career is not linear. I see a lot of young people who get very frustrated if their career is not going well. But I think if you're doing the best you cannot control the macro. If you graduated in 2008 during the global financial crisis, or if you graduated this summer during COVID, there's not much you can do. So keep doing your part, keep trying to build your CV. Maybe you get an internship. But I happened to graduate in 1997 during a fantastic economic cycle. I don't think I have half of the luck I've had, without that. So you need to recognize that there is fortune that comes into all this. Networking and karma, I have found that you're going to run into 5 to 10 people in your career that are just absolutely phenomenal. They're willing to give your time. They're great people. They're mentors, without calling them mentors, but you can reach out to them whenever you want. If you can find more than 5 or 10, fantastic. You may find only 2 or 3. That's also okay. But these people are super busy. So when you come to them with very specific asks. What is it you want? But if they care a lot about you, they will help you out. I've probably informally mentored 50 to 100 people over the last 10 years, predominantly since I moved to the Middle East. And I don't even remember them. I remember them. I don't remember mentoring them. They'll come and tell me, you helped me with this. I sat in a coffee shop and you gave me this advice. And I'll say, okay, I laugh at them. I'll say, I don't remember doing that, but I'm glad that I was helpful. And then you have the other side, the karma side. And I very much believe in this. I think there's a lot of there is some bad behavior in especially in finance. And those who you look around, you're like, okay, this guy keeps on getting lucky, keeps on cheating. They will get caught. I've very rarely seen someone in finance who eventually doesn't get caught at some point. So keep doing what you're doing, keep doing the right things. And, I think these things will work out. There is a way to be successful and do it the right way. Next point, figure out what you're really good at. I would never have been a good doctor or an engineer, even if I had the capacity to get those degrees, which I don't think I did. I figured out quickly I was very good in intense project type work where investment banking, you do 2 or 3 months on one transaction. That was really good. Private equity, I'm sitting on 5 boards. I'm in and out of situations. I'm growing my business. All that to me has been very, very good. I don't think I would have been very good if I was sitting in one job in one matrix, just doing one thing. So figure out what you're good at and gravitate towards that. Making yourself indispensable. I think that goes without saying, especially, these days. Figure out what's important to your boss. Don't necessarily, kiss his or her butt, but, figure out how you can help him or her, and you can stay ahead of the game with some of their blind spots, because everyone does have blind spots. There's this concept of cycles, which I'll get to in a little bit. And same with pattern recognition, I'll get to in a little bit. And then finally, this edge concept. I moved to the Middle East at the age of 30 because I figured out I was not going to have much edge left. I could have been good where I was, but I was going to a place that was wide open, and it made sense for me to go and take that chance, and it worked out, very well. On leadership, I think everyone has different leadership traits, and you don't have to be a cheerleader. If you're not a rah-rah guy, that's okay. But if you're also a heavily introvert, I think you'll also have a hard time leading people. So your leadership needs to evolve. So first you should figure out what is your style, and then you need to figure out how do I evolve it. This takes some time, and you really need to find your inner voice. This concept of servant mentality, this is a relatively new concept. I've only known about it for a few years, but it's something that I think I've been doing for quite some time. this concept requires a leader to take a step back and to be very comfortable other people getting the accolades, etc. This also only works, I think it works better with a more senior team. If you have a very junior team, it's harder to let them run and find solutions. But I think actually if the servant leadership mentality has been very beneficial to me, and once you have good people around you, you can get a multiple effect on your time, which has been very, very good. Ego, I don't think there's a worse thing a leader can have than ego. And I found that people that have had egos are the people who are not comfortable in their own skin, who do not have these skill sets. So they have to reply to every email. They have to do this and do that. So this is, this is very, it's easy to let your ego get in the way. There's next one, the skills that got you here won't get you there. I believe this is a book, but I saw this one time in a leadership class sponsored by the bank, which has stuck with me. If you look at for example, a junior analyst in an investment bank, his or her skill set, heavy financial analysis, and then you look at a senior managing director, they're not doing any modeling. They're now needing to win business, schmooze for clients, get new business. At the same time, if they didn't know the basics, they couldn't get that job. So how can you evolve from a junior person to a senior person and keep moving along the way? This thing is very tricky because it's quite interesting in that, I think the sentence says it all. The skills that got you to the place as a 25-year-old won't get you to where you want to go when you're 35. So really take a step back and ask yourself, what skills am I missing? Gossip, I think, can kill organizations. Do not allow it at all in your organization. If there needs to be an open conversation with a couple of people, just have it. But I think that's a much better way to do it. Manage your time. Your time is so precious. As I said, don't reply to every email. You don't have to be involved in every single discussion. Trust your team if they're a good team. Last point is, you don't always have the answers, but you need to know your direction of travel. It's very easy right now to get disoriented with what's happening. And it's okay not to know the answers today, but where is it you want to be in 1 year or 2 years? When you lose your bearings, it's okay, but always try to come back to what is your goal, what is your objective. I think that's something very important. So some observations I've had from, as I said, I've been on 9 or 10 boards. In terms of entrepreneurs, as I said, we've invested in online companies, we've invested in poultry businesses, tissues, a lot of consumer businesses, a canning business. I have found these entrepreneurs have tremendous grit, tremendous perseverance, but at the same time, they're not always able to see past corners. What do I mean by that? You'll be sitting with an entrepreneur, and all of a sudden, you're 1 year into the investment, you're going to see that commodities prices went up 30%, and all of a sudden, your COGS are way out of whack. So how come he or she was not able to predict that was going to happen? And I also have found them sometimes slow to seek outside guidance. So I think if you are an entrepreneur, really make sure that you are getting outside help, because it's really easy to have biases if you've been running this business for a long time. You don't need to pay anyone if you want to get a good friend or family member, but if you can get an independent board member to sit on a board or something, I think it's really, really important. In terms of the observations as an investor, so we have invested in 100 companies in the last 15 years with Standard Chartered and Affirma, and we've exited about 60 of them, 60. So, we've done a really good job in the emerging markets to exit when people said it's very difficult. But I think in terms of management teams, I have this concept: is the management team an alpha or a beta team? By that, I mean, it's very easy when your GDP is growing 5% to have a great year. But show me a great year when the GDP is flat or falling 5%. So the CEO and the C-suite, what type of skills do they have in that toolbox to get you a good year regardless, whether it's cost cuts, whether it's new products? We own we own a tissue business here in the region. We developed a mask product in 10 days from inception to the first mask going off the line. And that's because we have a tremendous CEO, a tremendous management team who've been doing this for 30 years. I don't think a beta team would have come up with such a concept. Next point, anything you buy, the two most important things are how much are you paying and what year did you buy it. So if you value a company at $100 million, then you better make up that $20 million in the back end. When I have found that people have stretched on transactions, it's been very hard to make the return. Second point is vintage. If you would have bought a restaurant business in Dubai in December 2019, it doesn't matter if you're the best investor in the world, you're going to struggle given COVID. So this brings me to this concept of cycles. Always know what cycle you're in, from a macroeconomic cycle, a personal cycle, a business cycle. And one exercise I sometimes have my team do when they tell me they love a deal is take a step back, get a piece of paper, show me the last 10 years, show me where you think we are, and I'm going to tell you why I don't think that's where we are. But there has to be discussions around cycles all the time. And I think, if you look at COVID and what happened, no one predicted this, but we were due for a black swan event. And these things have happened now for off and on for the last 10 years. So, it was sort of due. In terms of dealing with setbacks, investments go wrong all the time. We have found that investments that go wrong within the first year, it's very, very difficult to make a good return because you're always playing catch up. But you can you put in good KPIs, you have a good cash management system, and you just need to slog through it and speak to your management teams on a daily basis. When and how to exit. You need to have an exit strategy before you even go in. Anyone who says, well, we'll just IPO it, and you're a minority investor in these markets, you're in trouble. We like to have going in, we have redemptions, maybe we have a put, maybe we have a drag to a full sale. We can take an IPO in any exchange. You need to have optionality before you come in. Otherwise, it's very, very challenging, and you're going to get stuck. And you do not want to be stuck in emerging markets, especially in countries where you have a lot of currency issues. Last slide is just some perspectives on COVID. I really like this Mike Tyson quote, which I think about a lot, not just for COVID, but everyone has a plan till they get punched in the mouth. And, we all come up with scenarios. We all come up why our company is different. We all say all this kind of stuff. And I think end of the day, you can scenario plan as much as you want. When these, earthquakes type happen, you just sort of, need to survive and hang on. I think for me personally, I think this will be a generational change to our economies and more importantly to our consumer behaviors. So I think everyone, as they plan their businesses the next few years, has to think about who is my consumer base and are they downsizing their products? Are they downsizing their spending? And how will this work? Look for small wins. These are really, really tough. Times. So I think when you have a good day, you should embrace it. Realize how fortunate we are compared to others. We're 7 billion people in the world. Probably at least 1 billion people are going to go from being poor to being, abject poverty. So I think if you can take care of your neighbors, take care of the people around you who need the support. Next topic, how can you and your business come out stronger? I think there is a lot of ways to get more efficient, a lot more ways to improve your technology, diversify your supply chains. I think this is super important. And I think this is actually going to be the biggest takeaway from this. You're going to have countries and companies bringing back their manufacturing because no one's going to want to have to rely on one company or one country. Innovate, scenario plan, take care of your family, call your parents. These are really, really tough times. And, you can assume other people are having worse days than you. So just make sure you are, reaching out to people that you care about. So I'll pause there, and I'll just take a look at any questions that people have. And if you do have some, if you want to type them in, happy to also take them.
So we have around 10 questions so far. One was from Salwa Hamami. What was your book about? You said you wrote one while at Bear Stearns.
Okay. Now, in full disclosure, Selwa is my wife. So, but we're not talking very much these days. So maybe she wants to chit chat. And so it probably came from one of my kids. I wrote a book called The 101 Things Not to Do Your First Year on the Job, because I was making so many stupid mistakes my first couple of years at work. I said, people just tell us to go work. They tell us to, go and find a job. No one tells us how to behave at a cocktail party, what type of suit to wear. So I wrote it. I think it was 150 pages or so, 120 pages. I started to meet publishers, but I just got so busy with life, and then I moved to Washington that I just sort of stopped it. But at the time, interestingly enough, there was no one doing this book. I went to Barnes and Noble and these places on the weekend, which I'm sure many people won't even know what a bookstore is anymore. But they didn't have these things. 2-3 years later, I did see quite a few. My thought was this would sell for $7, $8, $9 and be given by an uncle to for like a graduation type of gift.
Great. Next question is from Bilal Anwar. What made you want to launch Affirma Capital while you were working in Standard Chartered, i.e. how did you foresee the opportunity, and what drove you to pull the trigger and say you want to go ahead and start something?
I think it was just time. I think I'd been working for 20 plus years. I was ready to take more risk. The bank, frankly, was ready to get rid of our business. If you look at these big institutions, no longer have private equity businesses because the regulatory capital and the regulatory framework make it very challenging. So there used to be many more of these prop books in banks, but they have stopped because the capital you had to hold as a bank was almost 2-to-1. So for example, if you as a bank today want to invest $100 million, you actually have to put $200 in your balance sheet against it. So it's a 2-to-1 capital allocation. And this came from, all from the 2008 crisis, all the pressure on the banks. So the bank was tired of us. We were a bit tired from being in the bank. And the bank said, look, if you guys can go and find a buyer for the remaining assets, you can go for it. They were surprised they were able to do it. And I said we closed it in August 2019. So timing was, either good or bad, depending how you look at it. Either good that we got it done by 2019, obviously not good that we're in the middle of COVID. But hopefully this business is resilient, and it's $3 billion of assets, or across Middle East, Africa, and Asia. So some assets are up and some are down, but for the most part, we're doing okay.
Great, we're getting a ton of questions. The next one from Jean Su. What are some of the podcasts you recommend? You guys are gonna laugh at me, but I love Pittsburgh sports. I listen to a lot of Pittsburgh sports podcasts still to this day. And I also listen to a lot of Washington D.C. Podcasts as well. I don't know, it just helps me stay connected a little bit, I guess, with those markets. I listen to some health podcasts. There's a guy named Bulletproof Radio. He speaks a lot on health and fitness. There's some Navy SEALs podcast I listen to. A guy named Jacko, Jacko, I think. He tells like long 3-hour stories and comparing wars to companies. Pretty interesting. And then I listen to some economic stuff. The FT does something pretty good. Bloomberg has a really nice half-an-hour one every day, which you can just, Bloomberg Surveillance, it's effectively their highlights from their Bloomberg show. So I think that's also been quite good for me. It's different for you guys who are sitting in the States who are getting all that U.S. knowledge, but for me, it's quite helpful to stay connected.
Great. We have a question from Andy Lee. Hey, Taimoor, I have a curious question. Why did you decide to stay in Dubai versus other cities within the Middle East?
Dubai is a great place for people like me. And my wife, I met my wife here. She went to college in the States, and then she came and she lived here as well. And it's an open society. The government has done a great job of making things very open for people. You can start a business relatively quickly. It's very safe, very convenient, a great place to raise a family. They are trying to make it like a Singapore. So if you've ever been to Singapore, it's quite similar in their approach. So it's just a lovely, convenient place to live. I also, pre-COVID, I used to travel quite a bit. They have a fantastic infrastructure, great airline as well.
Great. Now we have Jean Su again. You mentioned not working for paycheck. Would you have some personal advice in personal finance and wealth building?
Look, I think, we all have to work for a paycheck until we don't. So everyone's in a different, you need to feel comfortable. What I don't want you to do is go and start something on your own if you feel uncomfortable on a monthly basis. So you need to have a cushion, whatever that cushion is, and then build it and go from there. So everyone is different, but decide. Some people would need 2 years of salary in their bank. Some people are happy just starting something on their own. So it really depends on your personal risk tolerance.
Great. We have a question from Mr. Kaiban. What other schools were you close to attending aside from CMU?
Oh God, I don't even remember. I remember Vanderbilt was on the list. I don't know why Vanderbilt, and I'd never been to. It was very random, as I said. I was not, I was not very. I didn't have a very smart approach. I literally wrote to 180 colleges. So I think Georgetown or GW was there. UVA, because I knew Virginia. So those were the ones I remember. But it's funny. I didn't actually apply to any Ivy League schools because I really honestly didn't think I would get in, and I didn't have a lot of help from our college counselor at the time. So it was a bit random, to be honest with you.
Next question from Reem Labib Tyson. Are you considering publishing that book now and including this next chapter? And what with all these lessons learned now?
Oh, thanks, Memes. I think one thing that was very nice about writing these slides today, the last few weeks, was thinking about my approach, etc. Maybe at some point, if I do something, I'd love to put something together. But I've always found, if I can be helpful to people, I will. If this is just regurgitated for people, I won't. But I think it will be very interesting to see what happens in the next 10, 15 years in emerging markets with our company, et cetera. And if it makes a good story, I'm happy to discuss it.
We have a next question from Vineet. Very interesting point on business cycles. Can you give me some tips on how to get a better sense on business cycles and whether it's a good time to start a business?
So as I said, I think where people mess up is this thought process that this will be different. I look at this company, it failed, but this is why I'm unique and I'm different. So be very honest with yourself and honest with your business, why you're unique. That's one. Number two, look throughout history. And especially with globalization, we have these shocks that happen now, quite a bit, almost every 10 years. So what's going to happen when your company has that shock? What is your plan A, B, and C? is also, very, very critical. But I think today it's very difficult to determine where we are in the cycle given what's happening in COVID. I don't want to bore you guys. Everyone's reading the same articles. Is it a V shape? Is it a W shape? Is it an X? I don't know. I do see massive government stimulus. Globally, the governments have put in 4% of global, I believe it's 4% of global GDP in the market. Big numbers, or maybe 10% of global GDP has come in the last few months. So there is that. But I think the biggest thing in all this is consumer. Who's going to spend? Are people going to spend like they used to? U.S. And Europeans have been very using their credit cards the last 2 years. Savings are now going way up in Europe the last 2 months. If you look at the data, that wasn't always the case. So people are nervous, and as long as people are nervous, they won't spend.
Okay. The next question is from Abdul Munim. 8 years of experience in different sectors, no specialty. Very interested in investment banking. Where do I start?
So I think two things. I think if you have 8 years of general experience, you need to figure out what of those 8 years are interesting for the bank. So, maybe you were in a risk function. Maybe you were doing management consulting, and you can tie some of what you learned into that. If you're going to go to them and say you want to start an analyst program with 8 years experience, probably tough. They would rather take a 22-year-old and mold them how they see fit. But so as I said, I think work with what you have, figure out the things that you've already done, how that would be helpful to a bank, and then take it from there. And maybe instead of getting investment banking, maybe you go into their risk function, maybe you go into their compliance department, and maybe you can then go into then you can then get into the investment banking side.
Great. We have Naif Al-Taibi from Saudi Arabia. What's your perspective on switching careers from tech to finance and investment for those in the mid 35 to 40? I think you covered that with the last question. I don't know if you have any further perspective.
No, I think, yeah, probably similar. I do think it's possible, but you need to have a value proposition for the new group.
Okay, next question. Do you have a view on which of the New York M&A banks are thriving during COVID? I came out of engineering at Carnegie Mellon, and I'm currently working at Capital Markets Boutique in New York, and my immediate goal is to move to PE.
Sorry, could you repeat that part of the last part, Sajid?
Sure. So this was 1 second. Let me just get it up again. Yeah. Do you have a view on which of the New York M&A banks are thriving during COVID-19? I came out of engineering at Carnegie Mellon, and I'm currently working at a Capital Markets Boutique in New York. And my immediate goal is to move to PE.
I see. No, I wouldn't know who is thriving. I mean, as you probably know better than I, sitting in New York, what's happened is these independent boutiques have taken a lot of market share from the large investment banks because they can offer independent advice. So, you have the Evercores, the Perla Weinbergs, these type of groups that are doing quite well, and I imagine they will continue to do very well. I think generally this year will be a down year for investment banking and M&A advisory. So it will be interesting to see if people are hiring, or not. Okay.
Interesting question from Andy Lee. What was the best investment you ever made personally and or financially?
So it's funny. I don't buy individual stocks. I don't have time to look at my portfolio. So I actually buy a lot of index funds, and then I've bought a lot of real estate over the years and just sat on it. But what I've found is this job takes up so much time. we're able to invest in our companies and our investments. So that's good. We've done, we've done reasonably well in some of those investments. But yeah, I think you would probably actually find my personal PA pretty boring.
Okay, next question from Yusuf. If you got the chance to go 20 years back and had to do it all over again, what would you do differently?
Wow. I don't think much. I think I've been really fortunate. I've been really lucky. And like I said, I graduated in a really good boom market. And then I hit another mini boom when I moved to the Middle East. So this goes back to cycles, and playing the cycle well. And I don't think I would have changed careers. Like I said, I would not have been cut out for doing much more than what I do. I think you have to be honest with yourself. I think I would have been a horrible doctor or a horrible engineer. So, frankly, like I said, I think probably, maybe I could have got into a better bank, or I could have, stayed longer with a certain firm here or there. But I think for the most part, it's been pretty lucky and pretty good.
The next question is from Smeet. I'm affiliated with the tourism industry, basically organizing tours. What do you think businesses should do to come out stronger in my segment?
Yeah, tourism's in a tough spot. If we're all going to be jumping on these airplanes with COVID, with those hazmat suits, I think that's going to be a real challenge. So I would imagine you need to decide which consumers you're going to try to get first. Also, the other issue with tourism is if everyone is being asked to stay for 14 days in a hotel once they arrive. So, for example, I used to go to London almost once or twice a month for board meetings, in and out for 1 or 2 days. But today you need to stay for 14 days before you even go in the city, even if you want to travel. So I think business travel is in real trouble. And I think business travel, the margins on business travel versus consumer travel was much higher because corporations were paying for those business class fees. So I think where you're sitting on this, I think you need to figure out who I'm trying to attract, what are they going to pay, and frankly, what are the, what can I sell? What can I sell to them, and how will it work? But I think tourism is gonna be challenged.
Great. Now we have a question from Nick Guadioso. Hello, Taimoor. Great talk. You mentioned CMU and how it prepared you for the future. Any other key takeaways from your education or experience in Pittsburgh that you valued while you studied here and that helped you in your career?
Okay, well, that's one of my best friends who's writing under a code name, so we'll take that question. So, like I said, for me, the friendships that I made with some of these guys has been fantastic, and we've all been there for each other, and I think, like I said, because Carnegie Mellon was such a tough, scrappy place, everyone feels that they've been through a very tough situation, so they continue to stay in touch, and people know, oh, you went to CMU, you did this or that. It's a sense of accomplishment, and it's a sense of you've been through the wars together.
Okay, we have about 6 questions left and about 10 minutes left. Next question from Rana Al-Sakawi. How do you see private equity as an asset class evolving in GCC and wider MENA?
Yeah, that takes more than 10 minutes, but yeah, private equity's had a tough time in the Middle East. Obviously, Abraj fiasco did not help. But like I said, you're probably in a down cycle. If you buy an asset today in 2020 in Dubai, you're probably going to do fantastic. This is probably a good time to buy. So I do think it will evolve. It will get better. You will have new GPs come up. You need good compliance. You need good regulation. But you are coming from a real low point right now. So hopefully this is now going to improve. Because as I said, I think if you buy an asset today or next year, you're going to do quite well given the price you're going to likely pay for it.
Okay. Next question from Volkan Siri. We may have touched upon this prior. If you were to start a company today, would you choose to wait till the water is clear, or is there an outstanding opportunity not to miss?
I think I would stay clear unless the company I'm specifically I want to start is linked to COVID. So, for example, maybe this is last mile logistics in the Middle East, given now everyone is ordering everything, all over from their house. Maybe it's a healthcare app because now people are using telehealth. So if it's something that you're seeing because of COVID, then yes. Otherwise, I'd probably wait.
Noted. Next question from Ray Wong. How do you stay focused throughout the day? Do you have a morning routine?
Yeah, so I said I definitely work out in the mornings 4 or 5 times a week. I like running as much as I can. I think now that with COVID, it's very different, right? Everything is blending. We're all working from home. So that's been a bit of a challenge, but I'm very lucky. I have a very supportive family, and great kids. So it's it works out pretty well. But I do think you do need to have a routine. If you look at all the famous guys in Silicon Valley, the Steve Jobs and these guys, I mean, they wear the same outfit every day. They have the same breakfast. I think there's a lot to that. I try not to make a lot of decisions. I have very similar breakfasts every day. I'll wear the same outfits. I think that's very helpful because if you can get in a routine like that, you're getting positive momentum through the day. If you're spending half an hour deciding what you're going to eat for breakfast, all of a sudden it's 10 o'clock.
Right. Next question from Alia. How are you managing working from home during this global pandemic? And what, if anything, will you do the same differently when things begin opening up? Go Steelers.
Thanks, Al. So I think working from home has actually been really good. I think if you have a mature team, it works fine. We're doing a lot of Zoom calls. We are talking almost daily. We're having meetings twice a week about deals, for portfolio companies. So I think a lot of this stuff will stay. I think where the challenge is going to be is the new transactions. If you're not going out and meeting new people, if these city centers, Dubai, New York, these places, people aren't having meetings, then the new transactions will dry up. But for now, I think it's been very positive, and I think I will take a lot of this away in a positive way. Not sitting in my car, not waiting for, waiting on to go to the top floor of my building in the elevator. I mean, all these are real time wastes. So I think a lot of it is positive, but I think people want, if we can do it in such a way the next 6 months where the stress is better, the economy is better, maybe some of the kids are back at school, et cetera, I think that would help quite a bit.
Great. We have another question from Ray Wong. What's your view on Bitcoin?
I don't really have a view. I've never been a very pro Bitcoin guy, given how it was started. I do think in general, digital currencies, there's a huge market for it. And I think actually, if you look now at people using cash for credit cards directly in COVID, you're going to see a massive increase in credit cards. And, governments in general want to limit cash anyway, because they want to see all the transactions, they want to tax, et cetera. So I think you will, I don't know if our children will use cash. I think between cards and digital currencies, it's a massive opportunity, but Bitcoin itself, I'm not sure.
About 4 minutes left. Are there any specific sectors where you would expect Affirma to focus on types of businesses you would invest in given the changing landscape?
I think we'll continue to do what we're doing. We're heavy consumer, discretionary income, those type of businesses, industrial, food and beverage, telecom. So I think we'll continue to do very similar things. I think we will look for things more at technology angle. I think I wouldn't have looked at a telehealth company before. I'll definitely look at that today.
Great. So we have one from Hannah. Help me. I think this is your aunt. What's the name of your favorite aunt?
Yeah, yeah. She was the one who got me into Carnegie Mellon with her phone call. So it's well, actually, my other aunt may be listening, so I'd say it's a tie.
Great. Question from Shashank. What's the biggest risk you've taken?
Definitely moving to the Middle East at the age of 30, when my life was pretty comfortable. I knew what I was doing, but as I said, I felt that there was much more upside coming over here. But it was it was definitely a bit scary at the time to just move continents.
It's a great talk, Taimoor. Thank you for all your time today. I really learned a lot from the philosophical part. We've had attendees from all around the world, New York, Turkey, California, MENA region, to say, to just start. Any closing thoughts, words?
No, it's been a pleasure doing this. Thank you, Sajid, for the invite, and hopefully we can build out the alumni members as well. I think it's going to be a tough year, but if you can just survive this, keep your head down. If you look at history, when you come out of a trough, that's when the time to buy, that's when the time to expand is. So, this too will pass, but it's definitely will continue to be a challenge. So let's all just hang in there as well as we can.
Thank you for everything, Taimoor. Have a great evening, and thank you for our attendees today. We had over 70.
Great. Thank you. Thanks, everyone. And if I can be helpful, let me know. Bye-bye.